IKEA. This video is about the multinational furniture company IKEA, for which we will analyze its balance sheet as well as its income statement. The main vision and business ideas of IKEA are to create a better everyday life for the many people and to offer a wide range of well-designed, functional home furnishing products at prices so low that as many people as possible will be able to afford them.
IKEA is one of the biggest competitors in many worldwide markets. It is present in markets of furniture, home decoration, necessities, bedding, and appliances, allowing it to exceed $35 billion in global revenue and a very high customer trust. This also allowed IKEA to reach the top 20 most valuable retail brands.
Now let's take a look at IKEA's balance sheet. The total amount of fixed assets represent 46.3% of the total assets, which are divided into other fixed assets, and majority being property, plant, and equipment. The total amount of current assets represent 53.7% of the total assets, which are then divided into inventory, receivables, and mainly cash. All of these represent a total of 53,967,000 euros. It can be seen that the total amount of fixed assets did not change so much from 2015 to 2016, which makes sense since these are meant to be used over a long period of time. IKEA has also had a noticeable increase in cash and receivables, which is a good sign as they are making more sales in 2016 than 2015 by 2.6 billion euros.
The total amount of equity represents 72% of total liabilities and net equity, with the amount of 38,907,000 euros. The total amount of non-current liabilities represents 6% of total liabilities and net equity. These non-current liabilities are divided into two groups: long-term liabilities and other current liabilities. Lastly, the total amount of current liabilities represent 21% of total liabilities and net equity. These current liabilities are divided into two groups: short-term liabilities and other payables. IKEA's net equity has increased in comparison to 2015. This increase can be attributed to the increase in assets since liabilities did not significantly change. The long-term liabilities for 2016 have decreased and the short-term liabilities have increased.
To begin with, let's review what an income statement is. The primary purpose of any income statement is to report a company's earnings to investors and managers over a specific period of time. Before going deeper, let's look at the data available in the IKEA website. As we can see, the company has increased revenues by 7.4%, but managed to keep the cost of sales at the almost same amount. Therefore, the gross profit has increased by 12%, finishing at more than 16,000 million. After the financial income expense and taxes are applied, IKEA finished 2016 with an income of 4,200 million, that is 20% higher than the previous year.
In 2015, IKEA had 32,658 millions of euros. The net income was 3,512 millions of euros. That means that the net income presents 10.7% of total revenue. Also, we see that the total costs present 55.7% of total revenue. In 2016, the net income was 35,074 millions of euros. The net income was 4,200 millions of euros. This means that 11.9% of total revenue ends up as a profit. If we look at costs of sales and total revenues, we see that the cost of sales present 54% of total income of IKEA. We conclude that IKEA had 1.2% increase in net income over revenue ratio and 1.7% decrease in total costs over revenue ratio.